everybody, it's Mark Yagi. Welcome to a Market Pulse for what do we got? The 17th of January. Can't believe January already. Anyway, I want to sing that song. I'm so excited because the market is green today. And that means that you've got a tailwind if you want to get something today, buy something, add something, something that you think's at the right spot on the chart that's turning up. Today's a great day. Monday or Tuesday should be a great day. So hopefully you're taking part in this market because we've been through some red for the last month and it's been lousy and lots of stocks have come down, but now it's green and hopefully they stay green. I mean, usually we don't get that many head fakes in, in my green system, my genius system. So hopefully you'll be able to take advantage of that information. Anyway, just got off our mastermind group call, which was awesome. Everybody discussed a lot of cool things, but we're all like finally excited to not have to play so much defense, and now we can play a little bit of offense. So this was last week's chart. Look at all the red on the chart. Lots of red candles, 4 red lights. It was green, but immediately started to switch early this week. And you can see what it looks like now. We've got lots of green showing up, an official green market today. So 4 green lights, and we are ready to rock and roll. Doesn't mean it's gonna definitely happen. It just means that the probability is on your side. Everything I have, everything I talk about is all about probabilities. I don't predict things. I just try to make predictions based on probabilities, if that makes sense, right? So the probabilities are to the upside now rather than being to the downside like they were all this period of time. Like I was telling you, we were in red and yellow markets. All right, let's talk about some of the indexes. Look at the NASDAQ. It's bouncing back up. It was kind of in the doldrums, remember last week? And now it's up over the 50-day moving average. Good stuff happening in the NASDAQ. That's the weakest one. Well, actually, right now it looks like the strongest one, but it's been kind of weak lately because it's been taking us down with some of these big stocks. S&P 500, look at this, above the 50-day moving average and gapping above the 50. That's healthy. The Dow Jones above, just teeny weeny bit above the 50-day moving average, but we had a big gap up a couple of days ago on that interest rate stuff. And, it's a little bit of a gap up today. The Dow Jones is finally starting to show that it wants to go up, and I'll show you why in a second. The the New York Stock Exchange is also right at the 50-day moving average, went almost down to the 200-day moving average before bouncing up. But look at that, 5 blue days or green days in a row, up days they are. The volatility is now coming down 5 days in a row below the mean. That's another good thing. So you got 4 indexes kind of saying, hey, things are green. You got the VIX saying, hey, things are green. Look at this one. You got the transports, right? Gapped up 3 days ago on top of a gap from the day before that. The transports are when we move we move goods around the country. If we're moving goods around the country, that means people are buying stuff. People are buying stuff. That means people have money. That means things are good. Now, things looked a little recessionary over the last month, and that's why the market came down. But things are looking pretty good in the market. There's lots of hope and new administration coming in next week. And so people are looking to the future and maybe saying, hey, maybe we're going to figure some things out. And I don't disagree. The NASDAQ gas index, so the New York Stock Exchange gas index, all-time highs, at least on this chart. And that's because we're going to be fracking and pulling gas out of the ground. And we're going to be tapping into energy. And all the energy companies are starting to bounce. They were kind of on a downslope over the last few weeks, talking recessionary for some reason, and then everything switched with some good economic data and inflation and all that kind of stuff. So the gas index is going higher. Look at the oil index, the same thing, over a nice recovery over the last month or so after a big sell-off kind of thing. The housing index was really recessionary. I pointed that out to you last week, but when interest rates start to come down, like they're saying they're going to come down because there were better than expected numbers this week from the Fed. Look at that, couple of gaps up during the week, and it's heading back up to that 200-day moving average. It's got a lot of work to do to beat, candles like this and moving averages like that. But if things are good in the U.S., the housing index is going to recover. Apple, you can see this consolidation level that I drew here. It had a breakout here at 237. It spent the better part of the last month over that 237, but this week it's been below the 50, and it's been below that breakout period, kind of coming in here and testing it. I think, Apple, there's nothing wrong with it. I don't see a world without Apple. I just don't see any big impetus to take Apple higher. And so a little bit of bad news from China or whatever takes this thing down, probably go back up. But it's a good cash flow machine stock. We like it because you can get 1.5%, 2% a week on it. But it's not as exciting, although it is a chugger. It just does well over years and years. But if you're selling calls against it, we talk about selling calls and making income. You get about $218 per contract. So if you own 1,000 shares of Apple, you get you get $2,100 a week just to kind of hang out. And that's what we show you how to do. So that's a good covered call spot if you like Apple. If you want to wait till it becomes more favorable, I think there's probably a better time in the future. Tesla got a couple of gaps here on the chart. You've got a place where it pulled back. I see Tesla like kind of rallying here after this big 480 to 373 downtrend over the last month or so. Now it's kind of making its way back up toward those highs. When things kind of go toward these recent highs and all-time highs, there's not a lot of sellers there. So I see a lot of good stuff happening with Tesla. If you watch me, you know that I'm a big Tesla bull. So I'm always talking positive about Tesla because I think it's going to be one of the greatest stocks we've ever seen in history. And, that's going to happen over years. But right now we're in it trying to make decisions for days. But you could even buy Tesla and sell calls against it and pick up $1,287 per contract. It's pretty good juice. If you just did it over and over again, these are weekly calls. You make 154% a year. And I'm not saying you can do that, but I'm saying that's the calculator on the computer kind of figuring that out for you. So that's pretty good juice. NVIDIA, here's a stock that I just have been saying for more than a couple of months that, look, it's in a late stage base. That means there's a lot of sellers in it. And when there's a lot of sellers, every time it wants to go up, there's sellers that get rid of it. And so it just doesn't have a lot of love to the upside right now. Great cash flow machine stock where you can make income. But if you're looking for a stock that's going to double or triple this year, I don't think NVIDIA is your one. It could be. I mean, I love the technology. I love the company. I love the CEO. I just think that it's a tired move that it's made over the last, 13, 14 months. However, you want to buy it, sell calls against it, you make $204 per contract. MicroStrategy, you know that I'm doing a series on MicroStrategy. And this is the Gartley pattern that I've developed, the ABCD pattern on it. I got a target for me at 735. I don't try to predict where it's going. That's where I see the trend going. And when this big gap up today, I think it's going to be a good volume gap up today because Bitcoin's up 5% today or something like that, and probably 12% or something over the last 5 days. I think you're seeing that trend is starting to really start to take place. So, if you sell calls on this, you get $2,300 per contract. That's 308% a year. If you could just sell them at the money and the stock doesn't even move, to compare apples and apples. All right, one more here. We'll go with Amazon. You can see this is a nice uptrend that it's been making. Of course, uptrends kind of pull back and go back up and pull back and go back up. And that's what we're getting right now. This is not exciting, but Amazon is, continuing to grow, continue to move higher. I don't think there's anything wrong with this stock. Let's see, maybe do one more. Oh, well, there's a $274 per contract for the calls on Amazon. All right, one more. Palantir. A lot of people like to talk about Palantir. And, I put out a video a couple weeks ago. I said, watch out. This thing's kind of hitting its all-time highs. It wants to pull back. I still think it could pull back into the 44 area because there's a gap there on the chart. And it did pull back to the 50 and it's now trying to stay above it. I just watch out for this one because it's really extended on the weekly chart. Just be careful on Palantir. Good company, good stuff, just a little overextended. I wouldn't be trying to make a new position here on Palantir, but if you got some, you might want to look at selling calls, deeper in the money so you can protect yourself a bit. I think that's going to be it for me. I think that's a good overview of the market. Like I said, it's exciting. It's green. It's time to get in. Not all these green markets work on my system, but most of them do. And so that's the odds are in your favor if you want to get involved in the market. Don't be afraid of what Kramer or anybody on TV is telling you. Look at your market timing indicators. Mine says that we're green. And if you like mine, great, use it. Other than that, have a nice, long, extended weekend. I think we have a holiday on Monday and the new administration coming in. So I hope you enjoy an extended weekend with your family. And I'll see you next time on the Weekly Market Pulse. Take care.